Good morning, David here with his weekly wheat look on UK wheat, and today is Friday the 8th of October. And as usual, we'll be looking at the November current spot month and just bring the chart up of that. And as you can see, the market had this fall towards the end of September, has come down to test the support here on this bottom trend line at 148, and then the last 3 days we have seen a bounce back up to 157. Now, as you can see, I've marked on here our previous low at the end of September, round about the 142 held, and obviously I've marked the three previous highs here on the chart. Now, just if you look at the bottom stochastic, and I've marked the you know the highs and lows of this channel now on the stochastic, and as you can see, we got the buy signal from last week here, and obviously we've seen the rise up. Now, where we go from here will depend if we can break through this 159 mark, which is indicated by this 20-day moving average, which you can see is the red line here. If we break 159, 160, then we look at a chance of going back up to 171. And as you can see on the stochastic, this is sort of at the, will takes the halfway point of 50 here. We could go back up to reach here or not. But on the long-term look, this is quite common after a high rise bullish market, that you get this what they call distribution pattern at the topping of here. I'll just show you this, the four stages of the market. You get the big build up here, and you get then this distribution, which is taking place at the moment on the UK wheat market, and then obviously you either get the next leg up or you get an early decline where prices then start to come back. So really we're in stage 3 of this market, which is called the distribution stage. And if I go back to my chart, you can see this clearly, which is taking place now. And we could stay in this now for another couple of months, where the market just goes sideways between these two defined marks on the chart, being the high of 170 and the low, say, within the 150 bracket. So there, if you're looking at a selling kind of as a farmer, a pattern, you'd look to sell when it nears 170, and obviously hold off selling when it gets down to near the 150. But obviously, as usual, a warning sign is generated if we see the support line of 145 broken and the stochastic starts to drop. Then obviously we're looking at that next leg down, or it's coming out of here. But obviously a clear break up of the 171 would give you the next trigger up on that basis. And just to show you briefly on the live charts, we're looking at May, that's 2011. Just quickly look at that chart, because that comes into fruition. And obviously you can see clearly marked on here, these are live charts at the moment. We've had this bounce up, and obviously you can see on the May, the high was 175, the low was 152, and we've hit 163, which is 50% of this move down towards the end of September. So we have recovered that half of that move that we've recently seen. I think that's all at present, and obviously I'll put an update next week. Thank you for watching.